Cost volume profit relationship. CVP or cost volume profit analysis is a powerful tool that helps manager understand the relationship among cost, volume and profit. Okay beta, this is a very powerful tool, CVP, because it helps manager to understand the relationship about the cost, volume and profit. Okay, why it helps manager? Because managers see the future, right? Future of the organization, and manager is responsible for his doing, and this tool is work in the decision making as well, and like in direct costing, this tool is used in direct costing as well. So this is a very powerful tool, we can say. CVP analysis focus on how profit are affected by the following 5 factors. Okay, these are the 5 factors which affects the profit: selling price, sale volume, unit variable, total fixed cost, and the mix of the products sold. This part is discussed in my video, another video, introduction, with the name of introduction, application of CVP analysis, application of CVP concepts, where I have discussed these all points in detail, right? How I change the selling price, what would be the impact on how profit? If I change the sale volume, what would be the impact on profit? If I change the variable cost, what would be the impact on profit? Again, if I change the fixed cost, what would be the impact on profit? Mix of products. So if I am selling one product or two product or more than one product, it means what should be the combination of these two. So in short, CVP is a very powerful tool and we should have to know. Okay, the CVP, the contribution income statement. If you want to study CVP analysis, we must have to first know about the contribution income statement. What is it? The contribution income statement emphasizes the behavior of cost. Okay, in the contribution income statement, I have prepared the template for you for contribution income statement. Here it shows the behavior of cost. It emphasizes the behavior of cost. How it emphasizes the behavior of cost? Like you can see here, it's choose the variable expense, it choose the fixed expense. Both are separately, right? In the previous statements, we collectively or we didn't categorize these are the variable and these are the fixed cost, right? We mixed, right? We mingle them. But here we are segregating them, variable and fixed. In contribution, again I'm repeating this point, in contribution income statement we are segregating our variable expense and our fixed expense. Is that clear? Okay, and therefore it's extremely helpful to manager in judging the impact of profit of changes in selling price, cost or volume. Again, it is very helpful to the manager, we have already discussed. Okay, now here we take the example, right? The ABC Incorporation, the ABC company, and the contribution income statement for the month of June, the speakers sold, that is 400, right? Mean the company is selling 400 speaker. I am not writing here the total cost and the other things. I am just know about per unit cost, right? I don't know anything except per unit cost, right? Okay, and 400 speaker. If we multiply, if we want to find the sales in total, so we will compute by 400 multiplied by 250, right? So the value will be, if you can check it with your calculator, the value will be, I'm deleting here, 1 lakh, right? Variable expense 150 and 400, right? 150 and 400, like this one, like this. You will calculate 400 into 150. So the variable expense become 15 fours are 60,000, right? 15 4s are 660, and these values, right? 60,000. Okay, the contribution margin is 40,000. We take the difference. Contribution is what value? Contribution calculated sale minus variable, right? Remember this point. The contribution is very important at this contribution income statement where we are calculating our profit. It's very important to find the contribution margin, right? And the contribution margin is sale minus variable expense. Sale minus variable expenses, right? Sale minus variable expenses is equal to contribution margin. Contribution margin and then fixed cost. Okay, fixed cost is 35,000. So it becomes the net operating income is 5,000. Okay, I write here few calculation. How I calculate the sale? 400 into 250 equal to 1 lakh. How I calculate variable expense? Variable expense equal to 400 into 150, that is 60,000. Okay, now we are moving to the another thing, that is like I am wanna go to or I want to take a percent. I want to see this in contribution income statement in terms of percentage. Okay, the major element of all income statement is sale, right? The major element is sale. So we will divide all value with sale, like 250 divided by 250 mean 1, 150 divided by 250, that is 0.6, right? And 100 divided by 250, that is 0.4, right? If we multiply with 100, so it becomes 100%, right? If we want to talk in term of percent, it becomes 60%. And if we want to talk about this one, it means 40%, right? Clear? Is it clear to you? Okay, I'm removing this thing because I write here percent, I have converted into percentage. Okay, now the contribution format income statement. What does how we calculated? The 400 speakers, the sale is 400 speakers, the variable expenses 60,000 on 400 speaker sale. The total sale is 1 lakh. The variable expense is 60,000. The contribution margin is 40,000, and in fixed expenses 35,000, right? And the net operating income is 5,000. We have calculated. If I am moving towards 1 unit, right? If I want to ask about if I am selling 1 unit, mean 1 speaker only, so what would be the cost? Here I have right here, I mention here the fixed expense, right? The asterisk sign, with the asterisk sign. Okay, the fixed expense, I write here about the fixed expense. Fixed expenses assume equal to $35,000 fixed expense is given, and it is constant at all level of activity until and unless you don't change, right? Okay, यहाँ पे आपको ये कितना दिया हुआ है? 35,000. So again we will move towards here again. The fixed expenses 35,000 and the net operating income is 5,000. Okay, for 1 speaker, what would be the cost? 250 multiplied by 1, again 250, 150 multiplied by 1, 150, 100 multiplied by 1, 100, and it's remain fixed. Again I have told you about, if you are making 1 unit, if you are making 5 unit, if you are making 10 unit, and if you are making 20,000 unit, whatever you are making, the fixed expense remain fixed at all level of activity. So here we see here the contribution minus fixed expense, right? Fixed expense. So what we will get here, we will get the loss, that is equal to 34,900, right? You can calculate it. आप माइनस करके देखिए, 100 minus 35,000 equal to 34,900. 900, right? This is our loss. If we are, or if the organization, or if the manufacturing concern is preparing, making or manufactured one unit, it's mean they are getting the loss of 34,900, right? So no one wants to prepare only one unit. Obviously, if the organization is preparing something or manufacturing something, so they would move more units. They would not prepare only one units. Okay, now it's just we are checking here if the company is producing 400 units, if the company is producing one unit, if the another companies the same company is producing 2 units, so what will be the impact on 2 units, right? Now I have prepared this for 2 unit, the same cost per unit cost the same, 2 units. ये क्या हो जाएगा, 2 units multiplied by 250 equal to 500, right? Variable expense equal to 150 multiplied by 2 unit equal to 300. What is my contribution margin? Sale minus contribution margin, that is fixed expense 35. So it means now here my loss is 34,800, right? Mean if I'm producing 2 units, I'm getting loss again, right? Because my fixed expense is not covered here, right? Until and unless my fixed expense is not covered from the contribution margin, I would get loss, right? So what should I do? I should move towards the the checking, right? So how many units should I produce? I can check it. We will check. Okay, यहाँ तक clear है. 500, 300, 200, 35,000. Okay, now we produce 300 units, 300 speakers, right? 300, 200 speakers. Now we are manufacturing 300 speakers. Maybe the profit, we got the profit. Okay, on 300, again calculated. I'm removing these values, right? Okay, 300 multiplied by 250. What we got? 25 3s are 75. It's mean here we got the value 75,000, right? Okay, and variable expense 150 multiplied by 300. It's mean what we are getting here, 15 3s are 45,000, right? I'm converting into 1000 as well. 75 minus 45, 30,000, right? You can calculate it with your calculator. I'm fine without calculator, so I'm doing it, right? Okay, contribution less fixed expenses. Okay, what you will do here, again you will subtract fixed expense from your contribution margin. The net loss again mean if I am producing 300 speakers, but again I am getting loss. So how many units should I produce? We want to know that. The manager want to know that, right? That's why they are doing CVP analysis. The manager want to know what should be the price, what should be the cost, what should be the profit at different level of activity at different volumes, right? So here we are getting the loss. Again I'm deleting this value because this is not for, don't want to confuse you, right? 5,000, 30,000 equal sign, because we are not working in this in Excel. In the application I have give you the detail, right? So you can see there. Okay, now I am going to produce 350 units. Okay, I can check it. If I am producing 350 units, maybe I would got profit or something loss. So you can check it, right? Okay, 350 multiplied by 250, check it. 350 multiplied by 250, 350 multiplied by 250, what we get? 350 multiplied by 250, right? 87,500. So my value is $87,500. Okay, what is my variable expense? Variable expense 150 multiplied by 350 units. So variable expenses 52,500, right? Now the contribution margin is sale minus contribution margins 87,500. Subtract these value, what we get? 35,000. Okay, so I would write what is my contribution in this case? 35,000, right? 87,500 is my sale on 350 speakers. Variable expense is 52,500, contribution is 35,000, and the fixed expense is again 35,000, and the net profit or loss is 0, right? If I'm producing 351 unit, right? Now I am going to produce 351 unit. C मल्टीप्लाई 500 था, मैंने इसमें 250 और ऐड कर दिया, 750 हो गया. You can calculate it, right? 250 into 351. 87,750. This is my sale. Okay, what about my variable expense? 351 multiplied by 150. That is 52,650. Okay, what is my contribution margin? I can deduct 87,750 minus 52,650. So what I got? 35,100. Okay, the contribution margin is greater than fixed expense, right? My contribution is greater than fixed expense. It's mean what I'm doing here. It's mean I am getting profit. Mean if I am manufacturing 351 unit or 351 speakers, then I would get, then what I would get? I would get $100 only, right? This is my profit, right? This 100 on 351 speakers. Clear? Okay, next move. I use some definitions and formulas in this above. So I write here the sales I have told you, the variable expense I have told you, the CMR. Yes, I have calculated the CMR. Where I calculate the CMR? Contribution margin ratio. When I am talking about this in term of percent, it means I am telling about CM ratio, right? In term of dollar, in term of amount, it is contribution margin, right? In total, right? See here, in total, when I am converting it to in percentage, so it becomes the contribution margin ratio, and the variable expense become the variable expense ratio, right? This variable expense become the variable expense ratio when I divide it with sale, right? When I am dividing variable expense with sale, so what I will get? I will get 60%. Contribution margin 40,000 divided by 1 lakh, it's mean I am getting 40%, right? Which is ratio, in ratio. So this ratio is called variable expense ratio, and this ratio is called contribution margin ratio. Okay, next see unit CMR. Okay, unit CMR या तो आप total लो या आप per unit लो, दोनों से आंसर सेम आएगा. The answer will be the same in total CMR or in unit CMR. Okay, what is contribution margin ratio? I have told you about. The contribution margin is the amount remaining from sales revenue after variable have been deducted. सेल में से वेरिएबल को डिडक्ट कर दिया जाए तो आपके पास जो वैल्यू आती है दैट इज 40,000, जो भी इस केस में आई है वो क्या है आपका कंट्रीब्यूशन मार्जिन. यूनिट कंट्रीब्यूशन पर यूनिट सेल माइनस पर यूनिट वेरिएबल एक्सपेंस is equal to 100, right? The CM ratio show how the contribution margin will be affected by a change in dollar sale. सेल में चेंज आता है, कंट्रीब्यूशन मार्जिन में क्या चेंज आएगा? if in short, if my 1% or my 1 if my 1 CM ratio for each dollar increase in sale, or you can say for each dollar increase in sale, total contribution margin will increase by 40 cents, right? Again I am repeating, if CM ratio of 40% mean for each dollar increase in sale, total contribution margin will increase by 40 cent. Net operating income will also increase by 40 cent, but the fixed costs are not affected by the increase in sale. So contribution margin ratio, how I calculate? Contribution divided by sale, right? Okay, we have seen this relationship in a contribution format income statement, right? We prepared the contribution format income statement, right? And now I am moving towards the CVP relationship in equation form, right? CVP relationship and equation form, right? Note CVP relationship and equation form. Okay. Sales equal to, in junior level, so already you have studied this point, sale equal to cost price plus profit, right? बचपन में पढ़ा होगा, सेल बराबर होती है कॉस्ट प्राइस प्लस प्रॉफिट के. Now you have grown up, right? Sales becomes sales revenue, right? And the cost, your cost is changed. It converted into the variable expense and the fixed expense because you have changed, right? Now cost is in different format, like in variable and in fixed, right? In the previous and the junior classes, that was only cost, right? There was no fixed and no variable, but here we are segregating the variable and the fixed. So cost is 2, both we have added both cost plus profit. Yes, this is my profit. So you can easily remember this point, sales equal to cost plus profit, and we have two types of cost. We are seeing these all contribution income statement in equation form, right? How? Let me check. Sale equal to variable expense plus fixed expense plus profit. I hope you all are clear. If I want to find the profit, right, what I want to do, I want to find the profit. So how I will find the profit? Profit को यहीं रहने दे. Sales, ये दोनों वैल्यूज जब अपोजिट साइड पे आएंगी तो क्या हो जाएंगी? माइनस हो जाएंगी. सेल माइनस वेरिएबल एक्सपेंस माइनस फिक्स्ड एक्सपेंस, राइट? प्रॉफिट यहीं, ये दोनों वैल्यूज अदर साइड, तो ये क्या हो जाएंगी? सेल में से माइनस हो जाएंगी वेरिएबल एक्सपेंस एंड द फिक्स्ड एक्सपेंस. ओके, हाउ वी कैन कैलकुलेट दी सेल? सेल कैसे निकालते हैं? सेलिंग प्राइस इनटू क्वांटिटी, राइट? What was the selling price in the previous in contribution format income statement? 250, and the quantity were 400 speakers, right? I took 400 speakers, right? I'm not discussing the whole things like 350 and the 250 and 2 and on 1. I took first only one example, that is 400, right? And check this profit. I'm working for this. I'm doing equation format only for this one, right? Okay, now check again. Sale minus variable minus fixed. Sale equal to selling price into quantity. The selling price is 250 and the quantity is 400. So again I got 1 lakh, the same value which I have already taken, right? Okay, the next is the variable expense. Variable price into quantity. What was the variable price? 150 and quantity was 400. So what I did? Again $60,000. What about my fixed expense? That is remain fixed. What I told, it is fixed at all level of activity, whatever is, right? Okay, so if I want to calculate the profit equal to my sales were 1 lakh, my variable expense were 60,000. Okay, sale minus variable and minus fixed cost. So what I got? Profit, and the profit is again 5,000, right? So we have checked in CVP analysis. We have done, we first segregate the values, the behavior, the cost in term of variable and in term of fixed. We segregate in contribution format income statement, and then we prepare these relationship. We check CVP relationship in equation form. So in both things we check that on 400 quantity level the profit is 5,000, and in here we have already checked the profit is again 5,000, right? So this is the introduction of the cost volume profit relationship. This point, CVP analysis focus on how profit are affected by the following 5 factors. This is the another file which is provided to you with the name of some applications of CVP concepts, where I have changed the selling price, the volume, the unit variable cost, the fixed cost, and the product sold. So you will get to know very easily with the examples, or especially in a calculation term, that how its effect on profit, right? And it's the end of the basics, right? Thanks.